Hi, everybody, and welcome back to Fang Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, this has been a reflective week for the Fangs. Whereas until very recently, investors have been sort of heading pell-mell into the Magnificent Seven, as high-tech analyst Fred Hickey calls them. This past week looks very much to be a time of reflection and rethinking. I suspect that, in part, this has been due to the fact that the value stocks, as represented by the Dow 30, have been enjoying a nice, if belated, rally. And some of the FANG values, I think, are being called into question. As far as the NASDAQ 100 is concerned, even with the rebalancing, a rough calculation indicates that it is still onside as far as its breakout is concerned over its bubble price. That's 7.4 times book. And the question still is this going to be good or bad for the FANGs? My own thinking is that, on the one hand, investors in index funds will have to sell a good chunk of these high-priced and winning positions, and this may be well part of the weakness that we are seeing this week. On the other hand, sticking with those stock weightings means that, with any luck in this AI-oriented market, you will still be able to beat the NASDAQ 100 without really trying, just by standing pat. That may well attract some buyers who have been struggling to win against the NASDAQ for some time now. It does look to me that greater selectivity among the FANGs may now be required, however. Anyway, on that note, let's see what the FANG stocks themselves did in all of this. But before we take a close look at those FANGs and what has been going on, I want to thank our subscribers for pushing us nicely over that 2,000 subscriber level. So thanks to everyone who liked this video this week and all our regular subscribers. Okay, let's go and take a look at the FANGs, and the first one, it will be kind of, I guess, the lead AI stock, NVIDIA. And it remains nicely within that channel over between its HB6 and its HB7. That's 33 and 42 times book value. I have to say something about that right now, and that is to say that when we find a stock price between structural breakpoints, there really is not much that you can say about it as far as the short-term action is concerned. It is really only at the breakpoints that the information value of the SVA methodology really comes into force. So in between, essentially, stock price movements are random. Microsoft, which is, I guess, really the other key AI stock, if you like, continues to be held back by its HB2 price. It had a nice run the other day on the announcement of its new subscription pricing, but there's been no follow-through. Amazon, nice breakout over its bubble price, and what I really want to show you here is not the breakout, but I really want to show you here the focus on the fair market value, which is now ticking up nicely. And if you go back over the past few years, you'll see that every time that there has been strength in the forecast, there's been strength in the stock, and when there's been weakness in the forecast, there's been weakness in the stock. Well, now we've got some nice strength in the forecast, and I think the stock is going higher. Apple continues to ride its HB6 price. That's 33 times book value. Now, it has broken a little bit below that recently, but nonetheless, it hasn't let go. What we're actually really looking for is to take a look at the quarterly earnings, because I need the new balance sheet. I suspect that when we get the new balance sheet, by the way, that the HB6 price is going to be down a little bit, and we'll see that Apple continues to nicely ride its HB6 price. Now, last week I observed Meta breaking out. And of course, part of that was all of this goings on about their new Threads platform that they're offering. However, I do have to observe that enthusiasm for this platform has been less than powerful, and the stock is set back to its mid super growth price. I hope that Zuckerberg does not kind of take his eye off what he was doing, which is to say, getting costs down, improving the earnings outlook, and not wasting a lot of money with new gadgets, which Threads is. Because you see, the fair market value has kind of leveled out from that nice run that he had going. Anyway, today you'll observe that the stock has slid a little bit below its MSG price. We'll have to see if that's for real or not. Netflix was on a tear, and then today, whump. Down it came as people began to kind of reevaluate what their thinking of this stock was. And again, you observe that there has not been a powerful increase in the earnings outlook, and that may be suppressing the price movement. However, the stock remains above its bubble price, and consequently, we continue to hold it. Tesla, we've been looking at Tesla in two ways. One is an AI stock, and two is an auto stock. As an AI stock, the thing looks and could be wonderful, but as an auto stock, look, the earnings and the fair market value continue to slide away. Now, the stock, you'll observe, has fallen right to and a little bit below its HB3 price, which is 12 times book value. I will be watching that very carefully to see if that can hold, because if the market decides that Tesla is an auto stock, there may be a fair amount of downside ahead. Finally, Alphabet continues to dither on either side of its MSG price. That's 5.5 times book value. Of late, the stock rallied to the MSG price, couldn't break through again. So, very uncertain price action right now. Now, to summarize what happened, to recall what I observed last week, I asked, did you see much evidence of market weakness? Not really, did we? The FANGs have been holding in very nicely with their heavy focus on the artificial intelligence excitement. But this week, things have not been so benign. 4 of the FANGs, NVIDIA, Amazon, Apple, and Netflix, have been hanging in above their current immediate support levels and look, to me, as if they want to hold here and indeed work higher. Although Netflix did take a pasting on some merit, there may be some merit in paying close attention until we can see that it can hold above its bubble price. I think you'll recall that I observed some time ago that I couldn't see why the shares would break above their bubble price and into the bubble zone. And maybe now the market is coming to the same conclusion. We'll watch this one carefully. Meta, with its new Threads platform, was breaking out for what I thought would be a final run to its bubble price. That's 7.4 times book value. This week, however, we have seen a breakout and a pullback kind of move. And I have to observe that yesterday's and today's actions look to be a bit more cautionary. Threads may be attracting a lot of users, all right, but user reviews are not all that effusive by a long shot. However, we're in the stock for now. Alphabet has been dithering above its MSG breakpoint. That's 5.5 times book. I still suspect that the market, and I mean the Nasdaq and the S&P, can pull it higher, but you can be forgiven for being a bit skeptical this week. That leaves Microsoft in suspense with its still pending Activision acquisition. Had a big jump this week when it announced a subscription plan for potential AI users, but there's been no price follow through. If I were looking to buy with fresh money, I would hold off for now unless and until we actually see a true breakout. Altogether, in this past week, some of the sharp edges have been kind of taken off the FANG's performance, and more investor caution looks to be the order of the day. A final word to any of our viewers who may have come late to FANG Friday and may be wondering, what exactly is going on with this SVA methodology that you're watching here today? If you'd like a thorough introduction to the analysis, the how and the why it works in practice, then please visit us at strategicanalysis.ca today. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.